Ameet Mehta, Managing Partner at Solicis Lex, Advocates and Solicitors, and a proud alumni of BVP, that is Bharati Vidyapit, from batch 1993. All the faculty members and my dear students for an interactive session on business mergers and acquisition in India post COVID-19. So we are all talking a lot about the business. We are all talking a lot about how this IT or manufacturing or altogether the industry sector is going to head post this pandemic. There is a lot of talk about the cross-border politics which is going on, international policies which are changing, the exit and entry of the China and all those things. So how all these factors are going to impact to our economy, or I can say with the business mergers, or I can say the foreign direct investments. I think we will be enlightened with these factors in today's talk. So, established in 1983, Bharati Vidyapit, deemed to be university, College of Engineering in Pune.
Yeah.
Am I audible, sir?
Yes, you're audible.
I guess there was some network issue in between. I hope now it is clear.
Yeah, it is clear. It is clear to me.
Sorry. Sorry for the interruption and the inconvenience. So I was talking about the Bharati Vidyapit, established in 1983. Bharati Vidyapit, deemed to be University College of Engineering Pune, has been consistently ranked among top 100 institutions of India by NIRF, that is National Institutional Ranking Framework of an initiative by Government of India. The institute is also being ranked among top 50 private institutions of India by ARIA, that is Utter Ranking of Institutions on Innovation Achievements. With more than 125 companies visiting college every year for campus placements, we have achieved and maintained the placement ratio of 86 to 90% every year. And the salary bracket which we can talk about in today's world, it has gone up to 34 lakhs per annum for a company named Emirates in Dubai. For Rahul Maini, he is a student from BTech Computer. Saturday at BV is a program arranged for students to have a direct interaction with the industrial experts, which opens an opportunity to hear first-hand information about the recent developments and expectations of industry from students. This activity is definitely a step forward by our principal, sir, Dr. Anand Balarao, sir, for bridging the gap between the industry and the academia. For today's session of Saturday at BV, we have with us an eminent personality, advocate Ameet Mehta, sir, an engineer, an MBA graduate, and a lawyer. Sir, I can say you are having three different a degree and a certification from three different domain altogether. So you will be the perfect and correct and considered person to guide our students how this what you can say, the mixture or blending of all three domain can put themselves into a good career option altogether. Amit sir is a managing director for managing partner for Solicis Lex based out in Mumbai. Solicis Lex is a prominent and one of the fastest growing law firms in India and international, which provides legal advice and services to diverse client base across the India and globe. So with this international and national approach of Solicits, I wish a very best luck to you for future endeavors also, sir. And we are proud to have you on this today's talk for today's platform. A proud alumni of 1993 batch. With this note, sir, I request you to take the ahead with the talk and guide our students as to how they can blend the government all together for shaping of the career. Thank you. Thanks a lot, sir.
Good morning, everybody. It's a wonderful opportunity to be with you and, of course, be with all the Bharati Vidyapit students. I have a very long and a very beautiful memory of Bharati Vidyapits. First, let me thank Viswajit Kadamji, who is right now the main trustee today. At that point of time, it was Dr. Patangarao Kadam, and we used to had some interaction with him also at that point of time. Today, of course, Viswajit Kadam is the main trustee today. Let me first also thank Dr. Anand Bhalerao. Dr. Anand Bhalerao has been my mentor guide since the college days also. So I remember interacting with him. I interacting with Ashok Kakdeji, who then cleared MPSC exams and then became deputy collector somewhere in Sangli and Pune. So these were my mentors at that point of time. And thank you, Nachiket Kulkarni, who is of course looking after all the training and placement work in BBCUA. So I had some of the beautiful memories in Bharati Vidyapits. And let me first start that I was a person who had got ATKT. And I got ATKT in applied mechanics, and that carried on in the first year, second year, and third year also. Now you will be surprised how could a first year applied mechanics be carried on till the third year. But the good luck was that I was in the old course of 1993 batch, which was the last batch, and somehow the rules of ATKT changed after the results were declared. So I was allowed to take the ATKT of only that one subject, applied mechanics, and that I finally got cleared after 4 semesters. And there was a bad luck about that particular subject. So I was in basically, I did my BE production from Bharati Vidyapits, and we had a great team. We had a great association of people in Bharati Vidyapits. And the only bad memory I always had of Bharati Vidyapits is my ATKT, because I used to carry on for almost 6th semester. I carried on and finally got it cleared in the 6th semester, which was the subject of the first year and first semester. And then, of course, rest was the history. So in 1 minute, I would like to tell our background. So I did my engineering from Bharati Vidyapits. Then I did my MBA Finance from Leeds University Business School. Subsequently, I did my merger acquisition course from London Business School, which is one of the most finest courses in the world. So that was a great opportunity which I got, and admission also which I got due to my GMAT and TOEFL exams, and because of which I got an admission in merger acquisition course in London Business School. And I was subsequently in campus interview absorbed by Tata Group here in Mumbai. And at that point, I was reporting to a CEO of Ginger Hotels called Sheila Nair. And I would like to thank her that because of that, the journey continued in a very dynamic way and a very with beautiful memories I had. And subsequently, when I was at Tata Group, I completed my law exams and gave my law exams. So I did my law while I was still working. So I would like to tell all my engineering colleague friends that just don't end up only with an engineering course or just it's an engineering degree. Please note that there is lots of things you need to do even after engineering also. Because of the globalization and because of the merger acquisition across the globe, the foreign companies, the global companies are now looking at people, talents. The right word is talents. The talents who have multiple degrees, who have multiple experiences, and these experiences and the first job makes a lot of difference. My, of course, first job was in engineering department with the engineering company here in Mumbai, and then subsequently I was with Holiday Inn and Mana Engineering in Middle East for 4 years, and subsequently I did my MBA, and then I was with Tata Group. Then, of course, I got my first job as a lawyer with in 2G scam case, and I was with DB Realty, the one who were the main accused in that. And that's where my journey as a lawyer started. And today we are having a law firm called Solicis Lex. Solicitors is one of the largest law firm in India today. We have about 180 lawyers working. We are centrally located in Mumbai, and we have 9 associate and affiliate offices outside India. So we are in USA today, we are in Israel, we are in Dubai, we are in Bahrain, we are in China, in Beijing, in Hong Kong, and now just about to establish in Singapore. And our another main office is in UK, that is in London. And we are in all practice areas, right from merger acquisition, criminal cases, civil cases, redevelopment, property matters, NCLT matters, DRT matters, and of course the self-development now, which is the core going on in Mumbai. And the opportunity which we have been getting across spectrum as far as the work is concerned. So today we have clients like Reliance Industries, we have State Bank of India, we are representing State Bank of India in matters of NCLT which are more than 100 crores. So we have a very broad spectrum and a wide type of representation across the corporate world. We also have lots of matters related to merger acquisition also. Now, why we chose merger acquisition, and that too in the situation when it is in a post-COVID scenario. You would know that the scenario prior to March 2020 and the scenario post-March 2020, there is a lot of difference. You would have noticed in the media, in newspapers, in print and electronic media, that lots of companies are declaring bankruptcy. There is lots of liquidity problems across the world. And I see there could be lots of other issues coming up, maybe about 3 or 6 months from now. We have some departments like MSME, which is helping the department under Mr. Nitin Gadkari. It is helping lots of small and big businesses. But I think that may not be the only solution. There could be some economic package requirement. There could be lots of other things which the government is doing and will have to do. And I see that maybe this particular type of recession where we are in, especially due to the COVID situation, I foresee lots of problems, at least for the next couple of 2 quarters. The next 2 quarters are going to be very crucial as far as the economy is concerned, as far as the individual position, the economic position of each company is concerned. I don't see that the market will not improve post March, April, but you have to re-strategize. You may have to again make up a new business plan, and you have to start afresh the entire business. You have to think in a very different way. You may have to get better talents now. You may have to also get talents which are only relevant. You have to cut all the frills, all the extra expenditure that you've been doing. And I think cost cutting may be one of those important issues that each company will have to focus on. You may also look at certain other areas also, like you want to expand and diversify into different sectors. So merger and acquisitions are the manifestations of a completely inorganic growth process. So while mergers can be defined as a mean of unification of 2 players in the single entity, acquisitions are a situation where one player buys out the other to combine the bought out entity with itself. So it may be in form of a purchase, or where one business buys another, or a management buyout where the management buys the business from its owners. So with a few highs and lows, the merger acquisition activity in India during the period of 2015 to 2019 have been largely resilient. So during this period, if I correctly remember, India has witnessed almost about 3,600 mergers and acquisition deals, and the aggregate value of more than almost about US $310 billion. But in addition, the COVID-19 outbreak, which disputed the world in 2020, India itself is not left untouched as far as its own economy is concerned. Several M&A deals in the country have been stalled now in the wake of this pandemic, including the privatization of our very dear airline Air India and one of the very rocking PSU, Bharat Petroleum Corporation Limited. So once the world is able to curtail the spread of the virus and lift the lockdown across the globe, countries will look upon to their governments to propose some measures to revive this entire economy and help revive the M&A activity. So friends, I would just give some broad overview and maybe after that we can have some question and answers also. And I'll be as short as about 20 to 25 minutes in giving you the overall synopsis and the scenario. You know that there are different types of M&A. The term merger is not defined under the Companies Act 2013 or under the Income Tax Act 1961. As a concept, merger is a combination of two more entities into one. That is the desired effect being not just the accumulation of assets and liabilities of the distinct entities, but organization of such entity into one business. So the acquisition or a takeover, which normally we talk about takeover, the technical word is acquisition, and of course what we normally use in our subjects is takeover. So when takeover is purchased by one person who is controlling the interest in the share capital of all the substantially or all the assets or liabilities of the target company. And a takeover may be friendly or hostile also. Sometimes you find that there is a discussion and the person takes over. Sometimes you buy out the shares from the share market also and try to take some of the stake also. One of the recent examples I can give that during the COVID-19 situation, one of the Chinese companies have bought more than 3,000 crores worth of shares of HDFC. So there could be something which is slightly taken in a hostile way also. But of course, I am not touching that subject specifically today. I may be giving some more good examples also. So takeover obviously may be a friendly or a hostile way and may be structured either by way of an agreement between the offer or maybe majority of the shareholders or purchase of shares from the open market or by making an offer for acquisition of the target shares to the entire body of shareholders. So another form of acquisition may be by way of demerger. So many companies are demerging and that's another form of acquisition. So basically if I have to define a demerger is the opposite of a merger basically, where it is involving the splitting up of one entity into two or more entities. So an entity which has more than one business may decide to hive off or spin off one or of his business into a new entity. So the shareholders of the original entity would generally receive shares of the new entity. I would specifically now come to a very key and important definitions. And it's not a definition, it is also set by some good examples which are ongoing right now, pre and post COVID situation also. I can define merger into a couple of parts. One of them is called as a horizontal merger. So basically horizontal merger takes place between two entities which are engaged in the competing businesses and which are at the same stage of the industrial process. So I repeat, horizontal integration is that type of merger which is between entities which are engaged in the competing businesses which are at the same stage of the industrial process. So horizontal merger takes the company a step closer towards monopoly. See, you would have heard one of the management words called oligopolistic, means one or few companies controlling the entire market in that category. So a horizontal merger may basically take a company closer to monopoly in the entire country or in the entire corporate arena, whereby it is eliminating the competitors and establishing itself as with a stronger presence in the market. So the other benefits of this form of merger are the advantages of economies of scale and economies of the scope also. So these forms of merger are heavily scrutinized by the Competition Commission of India. You would know that Competition Commission of India would normally track all such deals where they find that things are very unfair to the Indian public, where people and the consumers are getting unfair deal of choosing between some of the companies. The classic example in post-COVID scenario of horizontal merger is the banks in India. Now let me give you the example. You would have seen lots of banks merging with each other. Punjab National Bank, Orient Bank of Commerce and United Bank of India. The government announced the merger of these three banks to create the second largest bank in the country after SBI. So this is called horizontal merger. If you remember that at a press conference, our finance minister Nirmala Sitharamanji announced the merger of 10 public sector banks into 4. And after amalgamation, only 12 PSB, that is public sector banks, will be left in India out of the total 27. So that's a huge horizontal merger of same type of businesses coming together. So Punjab National Bank, Oriental Bank of Commerce and United Bank will be brought together and they shall form the single largest PSB with a business of 17.5 lakh crore rupees. So that's the roughly the figure. Another horizontal merger example is the Canara Bank and Syndicate Bank. So this bank will become the fourth largest PSB with a business of almost 15.2 lakh crore, roughly about 1.5 times of Canara Bank itself. It will be also the third largest branch network in India with almost about 10,000 plus branches, which will have a strong presence, especially in the South India. So if you see the horizontal merger plan also, it is also spread geographically across the country. So when you see the geography part of it, each bank which is merging with each other has either the presence in North India, in South India, in East India, or in the western part of the India. So the amalgamated bank will have a total business of almost about 15.2 lakh crore of the gross advances with about 6.6 lakh crore. So these are some of the examples as far as the horizontal mergers are concerned. You would also look at another merger of horizontal type of merger is Union Bank of India with Andhra Bank and Corporation Bank. This is another fifth largest, you can say, amalgamated bank, and which is also a type of the horizontal merger. Lots of synergies are developed, especially due to ATMs. So this bank merger creates almost 120 million customers across 9,500 branches and almost with about 13,500 ATMs across India. So Indian Bank with Allahabad Bank, and there are lots of other such questions and the studies that we can do as far as this type of merger is concerned. If you see the impact of merger, especially a larger capital base would help the acquirer bank to offer a large amount of loans also. There will be faster delivery services that can get improved. Capitalization from the government reduces. Technological upgradation on the cards also happens with various other products. And of course, with fewer banks, it is possible for the ministry to better focus on the working of the banks also. You can also have a proper HR management where the employee management relationship is controlled very, very properly. Now, the next type of merger is called a vertical merger. So first was horizontal merger. Now I am coming to vertical merger. The vertical merger refers to a combination of two entities at different stages of the industrial or production process. For example, the merger of a company engaged in construction business with a company engaged in the production of bricks or steel would lead to a vertical integration. Many times we also call is it a backward or a forward integration. So there are lots of vertical integration which help the company move towards a greater independence and self-sufficiency. See, this type of merger happens. What happens? The company wants to do everything in-house now. So at that point of time, they may do a vertical, that is a forward or backward integration. One of the classic example was eBay and PayPal. In 2002, if you remember, eBay, which is an online shopping and auction website, and PayPal, which provides the services to transfer money and allow users to make online payments. They both merged together through a vertical merger process. Though both were operating in dissimilar businesses, the merger helped eBay to increase the number of transactions and proved a strategic decision overall. So this is one of the classic examples as far as a vertical merger is concerned. Now I would come to another term called congeneric mergers. A congeneric merger is a type of merger where two companies are in the same or related industry or markets but not offer the same products. So if I have to define in a simpler way, in a congeneric merger, the companies may share similar distribution channels, providing synergies for the merger. So the acquiring company and the target company, that is the one which we are going to acquire, they may have overlapping technology on production systems, making for an easy integration of the two entities. So this type of merger is often resorted to by entities who intend to increase their market shares or expand the product lines. I'll give a classic example. One of the classic example somewhere in the year 1998 was the giant Citicorp. It merged with the financial services company that was called Travelers Group. And this deal was valued at $70 billion. It's a huge merger. So the two companies joined forces to create Citigroup Inc. So one of the major transaction benefit is that in congeneric merger, the two companies which are in the same or related industries but offer different products. So they can come together and form a synergy as far as the business is concerned. Another one is called a conglomerate merger. So friends, this is very, very important. A conglomerate merger is a merger between two huge entities which are in unrelated industries altogether. So the principal reason for an conglomerate merger is the utilization of financial resources, enlargement of debt capacity, increase in the value of outstanding shares by increased leverage and earnings per share, and of course by lowering the entire average cost of capital. A merger with an unrelated business also helps a company to foray into diverse businesses without having to incur large startup costs normally associated with a new business. So supposing I'm starting a new company and I'm going to start in a big way. So obviously my capital is going to be very, very big. So many times there's a lot of startup cost. I'll give you an example. If a company like Six Flags in USA or Disney, they want to open up another Disney somewhere, there's a huge cost to that. So imagine if Disney comes and acquires someone like say Imagica or there's some other type of company here in India which is an amusement park. So obviously its startup cost may slightly reduce. So one of the biggest example in 1995, if I correctly remember, was Walt Disney and the American Broadcasting Company. In 1995, the Walt Disney Company, it purchased the American Broadcasting Corporation, gaining into the entire ABC's national television ring, and as well as the ESPN's extensive sports coverage. So if you correctly remember, friends, ESPN was owned by ABC, and because of that, they got the extensive coverage of all the sports channels also. So Disney already, which an old several cable networks across the globe, and at the time of this deal, they should have got them a mixed conglomerate of merger because it opened up extension to distribution channels and the content options for Disney. Another example could be someone like Amazon and Whole Foods merger. So Amazon and purchased the Whole Food company in 2017, just about 2 years before, and has been categorized at times as the horizontal merger also, and other times also as vertical or even conglomerate merger. Since Amazon, it fully broke out into a grocery industry, illustrating the entire complexities and crossovers involved in modern day large mergers. So this is one of the very, very important transaction which you would like to study on, that is between Disney and of course of Amazon also. Now friends, another type of merger which is what we call as the fifth type of a merger is called a cash merger. So in the cash merger, it is also called a cash out merger. So the shareholders of one entity receives cash instead of shares in the merged entity. So this is effectively an exit for the cashed out shareholders. When FB, that is a Facebook, now see, I'll give you a very, very classic example, and we all would like to hear this example because we all are always on Facebook, WhatsApp, Twitter, Insta. These are some of the social medias we are now accustomed on day-to-day basis. In the morning when we get up, we always like to see either the FB or the WhatsApp or the Twitter. So in the year 2014, FB, that is Facebook, announced its plans to acquire the entire WhatsApp. So now these days, when you open the WhatsApp on the screen, you would have seen WhatsApp, and at the bottom you would find by Facebook it's written. So WhatsApp's founders, they attached a price of $16 billion to their company. And what FB offered them, that we'll give 4 billion in cash and the remaining 12 billion will give FB in form of the shares. So this is commonly called as the cash and stock merger. So this is one of those classic examples where FB announced its plans to acquire the entire WhatsApp group. The sixth type of merger is called a triangular merger. So friends, this is also a very interesting case where a triangular merger is often resorted for regulatory and tax reasons. So as the name suggests, it is a tri-party arrangement between three companies in which the target merges with a subsidiary of the acquirer. So based on which the entity is the survivor after merger, a triangular merger may be forward. That means when the target merges into subsidiary and the subsidiary survives. Or it's also called the reverse merger, where the subsidiary merges into the target and target survives. So one of the classic example I can give is of an Indian company. So there was an oil exploration company called Kane India. So Kane India was a part of the parent company called Vedanta Group. So it did a reverse merger and joined back to Vedanta Group. Another example I can give you of reverse merger is ICICI Bank, which merged with its own arms in the year 2002. So if you see if you do some research on that, you'll find out in the year 2002, ICICI merged back with its own arms. Another one good example I can give you of triangular merger is Godrej Soaps. Now, Godrej Soap was a very profitable company and almost with a turnover of 437 crores. And it did a reverse merger with its own loss-making company called Godrej, that is called Gujarat Godrej Innovative Chemicals, which was a 60 crore company. And when they did a reverse merger, the resulting firm was finally called as the Godrej Soaps. So this is the example as far as the reverse merger is concerned. Now, friends, I would also like to give you some ideas about the acquisition and how SEBI also behaves on acquisitions also. So, merger and acquisition, let me first talk to you about in the bracket of the securities law. So, normally it is called a takeover, that is the takeover code or acquisition code. The SEBI, which is called the Securities and Exchange Board of India, is, of course, you all know it's a nodal authority regulating the entities that are listed or to be listed on stock exchange in India. So the SEBI in the year 2011 restricts and regulates all the acquisition of shares, voting rights and controls in the listed companies. So acquisition of shares or voting rights of the listed company entitling the acquirer to exercise 25% or more of the voting rights in the target company or acquisition of control. So it obligates the acquirer to make an offer to the remaining shareholders of the target company. Normally, the offer must be to further the acquirer at least 26% of the voting capital of the company. I know slightly you may find these terms as slightly technical, but I think as in this program, you should know that some of the technical companies you also as an engineer would require it in future. I am sure many of you may not end up just being an engineer. You would go for a management or some other courses, or maybe you may become a legal or maybe a company secretary type of a scenario also, and where you would like to get some more educational talents also. So if the acquirer already holds about 25% or more, but less than 75% of the target company and acquires at least 5% shares or voting rights of the company within a financial, it shall be obligated to make an open offer. Many times you have seen this obligation is of course subject to exemptions provided under the tax over code of SEBI. So the exemptions from the open offer requirement under this tax over code include inter alia the acquisition pursuant to the schemes of arrangement approved by the NCLT. Now you would know what is NCLT. NCLT is another court, you can say, or the tribunal, which is like the city civil court or the high court. So it is all subject to the approval of NCLT. Now there are certain things which are called a mandatory offer also. So under this takeover code, an acquirer is mandatorily required to make an offer to acquire the shares from other shareholders in order to provide an exit opportunity to them prior to consummating the acquisition. So if the acquisition fulfills the conditions, then you are satisfying the requirements of the takeover code. There is something called initial trigger. So if it's a highly, you can say technical question, that if the acquisition of shares or voting rights in a target company entitles the acquirer along with the persons acting in concert, that is a PAC, is called persons acting in concert, that is called PAC, to exercise 25% or more of the voting rights in a target company. So it is called the creeping acquisition. Creeping acquisition, if the acquirer already holds 25% or more and less than 75% of the shares or voting rights in the target company, then this acquisition of additional shares or voting rights entitles the acquirer along with the PAC to exercise more than 5% of the voting rights in the target in any financial year. If you correctly remember, many times in the newspapers and the media we find that acquisition is all about control. So one person wants to control another person. So if the acquirer acquires control over the target company, regardless of the level of shareholding, then the acquisition of control of the target company is not permitted. You may note this, it is not permitted without complying with the mandatory offer obligation under the takeover code. So even if I have the money and I still go on buying someone's shares, I still have to fulfill certain obligations of mandatory offer under the takeover code. So what constitutes this control is most often a subjective test wherein it is determined on a case-to-case basis. So for the purpose of takeover code, control has been defined under the right to appoint majority of directors. That's one part of it. You may note that. The second is right to control the management or policy decisions exercisable by a person or the PAC, which is directly or indirectly including by the virtue of the shareholding. So over a period of time, the definition of control has always been subject to different assessments and has turned out to be a quick evident for a gray area under the takeover code. I can give one example of being a lawyer. I should also share one good example. Thus, the Supreme Court order in the case of SEBI versus Shubham Ventures Private, which accepted between the parties left open the legal question as to whether negative control would amount to a control under the tax takeover code. Now, friends, because we as law firm keep on getting such matters, I would tell you to go to this classic case, which I repeat, it is called SEBI versus Shubham Ventures Private Limited, which is a very, very good example where in one particular case, you would know the entire subject of basically tax over code and acquisition is concerned. In fact, you would be surprised that the Supreme Court had ruled out that SAT ruling in this case against which SEBI had appealed before the Supreme Court, which ruled that negative control would not amount to control for the purpose of takeover code, should not be treated as a precedent. Please note, I am repeating it, should not be treated as a precedent. So with no clear jurisprudence on this subject matter, each veto right would typically be reviewed for the commercial parameters underlining such right and its impact on the general management and policy decisions of the target company. So this is one such example I can give. There's another example I can give is SEBI, in light of the Jet and Etihad transaction, had indicated its plans to introduce new guidelines to define, which it called at that point, it's called the bright lines, to provide more clarity as regards to change in control in cases of merger and acquisition by issuing a discussion paper. So SEBI finally decided not to go ahead with the bright line test for determination of acquisition of control and concluded that it needs to be determined on case-to-case basis only. Friends, I would not like to go into the voluntary open offer types of acquisition, but I can only tell you in one line that an acquirer who holds between 25% to 75% of the shareholding and voting rights in a company is permitted to voluntarily make a public announcement of an open offer for acquiring additional shares of the company subject to their aggregate shareholdings after the completion of the open offer, but not exceeding 75%. Now, one important aspect I would like to tell is about the minimum offer size. What happens many times, there is a minimum offer size that you need to give, which is first of it is called as mandatory offer. So an open offer is normally given for acquiring shares, but it must be for at least 26% of the shares of the target company. So you may note, friends, an open offer is normally at least of 26% of the shares of the target company. Target company means the one which we are going to acquire. It is also possible for the acquirer to provide that the offer of the acquiring shares is subject to a minimum level of acceptance. So I am not going to the other definition of voluntary open offer, etc., or the pricing of the offer, because that all depends upon the give and take between both the parties. Okay, now let me come to the process. In the process, there are lots of procedures that we need to follow. Okay, is a PDF in this? Yeah. So let me tell you the main procedure and the process. So the process of M&A activity during this lockdown period and prior to that have been slightly delayed and slightly different in nature. Okay, the lockdown period and the period immediately, like you can see a downward trend in the entire M&A activity in India. So it is very crystal clear that some of the indicative outcomes of these particular types of failed or stalled M&A activity are highly detrimental to the companies today. There are lots of liquidity issues, and you imagine if the merger or the acquisition or the M&A activity is stalled, then imagine what is the economic condition of that particular company. There are lots of issues which are either delays and dropouts. So any M&A deals which were at a structuring stage at some point of time, but now due to the COVID-19 situation, they are more likely deferred to be done at a later date. So these are all activated once the crisis abates. The seller-driven bid processes are likely to see the bidders also being dropped out now, because what I was going to offer you in February 2020, I may not necessarily offer you now in maybe October 2020. You may also see that due to deglobalization, there is lots of cross-border investments which has been hit now, since MNCs and private equity funds are likely to conserve a lot of cash in this uncertain market and become increasingly inward-looking. There are lots of opportunities despite this grim outlook, and the crisis may open up some buyout opportunities which are normally available. You may see one more important thing. There is something called stimulants and catalysts. So, friends, if you see, there is a financial stimulus packages. I would just give the example of that to you. Yes. So, the financial stimulus package and measures such as the tax relations announced under the Union Budget of 2020, which includes the rationalization of provisions pertaining to dividend distribution tax, which is called DDT, and the exemptions on investments by sovereign wealth funds, and the relaxations of compliances norms by the regulatory bodies such as SEBI, etc. Now, friends, you would have seen in this COVID-19 situation, there are lots of limitations. So these limitations are with respect to the M&A transaction which are already entered, and the approach of the deal making will need to factor in the limitations posed by the present crisis. Now I am coming to one of the most important thing which all of us should know. And friends, if you have paper and pen, I would also tell you, you can note this down also. Because if I am an engineer, if I happen to do an MBA, if I become a CA or a lawyer, but for all these things, you need to know this, because this is the core and the crux of all the categories of industry, whether it is engineering, whether it is a marketing, whether it is a management person, whether it is a finance person, whether it is a lawyer, or whether it is a chartered accountant. So friends, I will tell you something about due diligence. The due diligence process is the most important point and the most important turning point for all the deals in M&A. Improper due diligence may break your entire M&A deal. A proper due diligence process may bring around a fantastic result for both the parties, and both the parties may get it basically a very win-win situation. So basically it relies less on the physical meetings or maybe site visits and more on the virtual data rooms and focus. So note, if I tell you, oh, this is my project and this is my plot and my industry or my factory available, they are not going to rely on that. You may be having a tower available. What they are going to rely is only and only on the data. So first thing is data. The data collection of all the companies is extremely important and very, very important for all sectors of industry. If I were to tell you its ability to pay off its debts and insolvency risk, liabilities towards the health and medical care of employees, including the availability of insurance, compliances with the government's directives, which are related to pre or post COVID-19 situation, and the compliances related to data and the company regarding the conditions of the employees, the sensitive data protection, etc. All these things play lots of important role as far as the due diligence is concerned. If I have to tell you some important factors, what you should look at. So let me first tell you, the first head is the financial information. So if I am a lawyer, or if I am a chartered accountant, or if I am an engineer, the first important thing that you should see if it is a merger or acquisition is the financial information. Try to collect all the data of that company as far as the annual returns are concerned, that is the income tax statements, the balance sheets, the cash flow, the footnotes on the cash flow statements, then the management financial reports, the auditors reports, the breakdown of the sales and the gross profit. Now let me give you example of an automobile company. If there is an automobile company and you are going to buy some or whole part of that company, so you would be obviously interested to know what is the sale of that company. ABC, example, ABC automobile company is there in say Pune or Mumbai, and you decide that I am going to buy this company. At least you should go and check what is the product type, what is the distribution channel it is having, and which geographies it is doing business. A manufacturing procedure in Pune and a industry in maybe Uttarakhand may be totally different in nature because the geographies are different in nature. So you also have to check the current backlog of the customers. Example, I'll tell you, if supposing I have a capacity to manufacture 100 cars in a month and I have a waiting list of 1000. So you understand, I have to now scale up my manufacturing. So you also need to track the current backlog by the customers. You also need to check the accounts receivable in the schedule. So there is lots of amounts which are outstanding. Example, you have given it to your dealers and distributors, and those dealers and distributors yet to pay. So please note and take out all the account payments which are receivable. Now friends, in the finance, you also need to look at the financial projections. If I am going to buy a company or acquire a part of the company, at least go and try to have a forecast and see the predictability of that business for at least 3 to 5 financial years. Please note that what business I have and what I may have 5 years hence makes lots of difference. So you also need to note that the financial projections are very, very important as far as the predictability of our business is concerned. You may also have a company pricing policy. Supposing you are selling a vehicle, an automobile at say 5 lakh rupees, and your competitors are selling either at 4 lakh or 6 lakhs rupees. So you need to have the pricing policies and the competitive analysis between all your other immediate competitors. I may also like to point out that you need to see the capital structure of the company. Every company may be having a current shares outstanding. So this is very important that you need to see the current shares outstanding, who are the current shareholders, and you need to see the balance sheet liabilities and the capital losses. Other financial information which you need to look at of the current tax requirements and the tax liabilities. Now what happens now, you need to see that the company which you are going to buy or you are going to acquire, you come to know there is hundreds of crores of tax liabilities, and you may all spend all the money paying taxes only. So note that the tax information, what is the tax liability, is extremely important for you to note it down. Some other important small points may be something like the schedule of financing history of whether it's in form of equity or warrants or debts. The other things as far as finance is concerned. Let me come to the due diligence of the product itself. Now, when you're doing the due diligence of the product, each product within the market segment should be analyzed properly. So this also includes the entire product literature. Example I'll give you, if I am going to acquire a mobile company, a company which is manufacturing mobile handsets. So the first thing I would like to see is what is the literature of that company, what is it selling, what is it USPs. Then I see what are its major target customers and where all it may be in future I can sell it off. I also see the product's historical data and the projected growth which I may expect in next 3 to 5 years. Then you may see the market share. Take the example of iPhone versus Samsung. Now iPhone may be realistically maybe having a major share, the market share in USA or maybe in Europe. Samsung may be having in maybe Asia. We don't know what is the real truth. But you need to see the market share of your product. You should also see the speed and the nature by which you can make a technological change. I will give you a small example. At one point of time, Nokia was bought over by Apple. Okay. At that point of time, the Nokia CEO gave a speech and he told that we were slightly behind in technology, and that is why we had to sell it to Microsoft. So when Microsoft originally gave offer, they were ahead because of the technological advances. So Nokia was slightly behind in technology advance. If you remember, in early 1990s or maybe in 2000s, we always had a Nokia handset. But because of the features which came from iPhone, Samsung, Oppo, and many other things, it basically was outdated model. And then they had to make lot of technological changes. So you may also need to know the timing of the product. Remember, every product has a shelf life. You need to enhance it into a new product and again package into a different type of product again. Also remember the cost structure of manufacturing that particular product and what is the percentage of profitability. So friends, as an engineer, you should know that this is my manufacturing cost, and if this is my manufacturing cost, this is the profitability I would get after a period of time. So this is as far as the product is concerned. Now you should also do due diligence of customers. If you are having a customer base of say 1 million people in India, okay, you should ensure that you do a proper dissection of the customers in terms of geography, in terms of its reachability, in terms of its products which are owned by the customers, and also in demographies, that is males and females, and age brackets also. This is very, very important because someone who is aged 60 may not necessarily use a product which the person who is the age of 20 and 30 may use. So dissect your category of customers into different type of customers and try to develop a strategic relationship with all these categories of customer. You may see that age bracket of 30 may like a different type of advertisement, and the age type of 50 may like a different type of advertisement. So you may always remember that the advertisement or the marketing strategy is what we are going to do. It has to correlate with that particular age bracket also. So remember that the strategic relationship is directly proportional to the sale of the product of your area or the gambit of product that you have. Now note that you should also note the revenue which you receive by this category of customers. If you are able to track that the people in the age bracket of 50 to 60 are using it more and the people in the age bracket of 20 to 40 are using less, so you may dissect the revenue of these customers also. So this is very important. You may please note as far as the customer is concerned. Now another due diligence that you should do is the competition analysis. You should note that you should always have a basis of your competition. I'll give you example: price, service, technology, and distribution. These are the 4 main parameters which I would look as an engineer as well as lawyer, where I am going to check out the merger or acquisition of a particular product. So I repeat: price, technology, service, and distribution. These are the 4 important parameters. You would also have noted something called SWOT analysis, SWOT, SWOT analysis. I would request each of you that once you go to the search engines and try to go into the SWOT analysis, that is called the strength, weakness, opportunities, and the threats in the marketplace. So when you're doing a due diligence, this is a very, very important chart which you need to follow. That is a SWOT analysis. Another important due diligence is your distribution channel. Now, this is again very, very important. You have a product, you have money, you have customer, you have the competition analysis, but you don't have a proper distribution channel. This is where you may fail. So please understand, we need to have an extraordinary, better, good marketing and distribution channel. And this due diligence is very, very important from a merger and acquisition point of view. So the strategy to implement this distribution channel is also equally important. So discussions on domestic and international distribution channels. So if I have a product, I may not restrict myself only to maybe India. I may sell it to Western countries. I may sell it to Middle East. I may sell it to Southeast Asia. So you need to have the entire geography or the distribution channel at a domestic level as well as the international level. You should also know the strategy of positioning your product in the market, the marketing opportunities, the marketing risk, and the distribution of marketing program examples you should have, which should be there on your drawing board. Now, you should also target some of the major customers. Supposedly you have a distributor who is taking 70% of your material, and then you have 25 distributors only taking 25% of the materials. So your important person is the 70% because he is taking the major part, and he's selling most of this. So this data also you should try to gather at the time you are doing the entire due diligence. One important, the last point we should know as far as the due diligence is concerned is the research and development. Friends, if I am a lawyer and if I have to acquire a company, I have to see after merger or demerger of a company. If I have to take part of the company, remember legal due diligence is also very, very important. You have to check out what are the number of cases pending in a civil court, in NCLT, in High Court, in Supreme Court, or maybe are there any national or international arbitrations pending. You may end up taking a property, you may end up taking a business which is highly litigated, and you would spend lots of crores of rupees only fighting litigation cases. So most important is the research on the litigation matter and the research on the product. How much this company is putting its personal or its key employees in HR department in doing research work, the patent work, the copyright work for this particular company. Remember that you need to always get your product copyrighted or patented, which normally call IP, that intellectual property rights. Every manufactured item, whether it is automobile or engineering product, or maybe it is something which is the IT product, every product needs to be patented. If I am going to make a movie, the movie has a copyright. If I am going to make a song, the song has a copyright. If I am going to purchase a mobile instrument whose name is iPhone, the word iPhone and the logo of Apple is having an IPR and trademark connected. So remember, you also have to do due diligence of the logo, the patent, the copyright of that particular product also. And lastly, as far as due diligence is concerned, you should just see the management and the personals who are handling the company. Ensure that you have the right people running this organization. The example I can give you is you may have a CEO who has a particular type of skill or management skill, who may be a graduate, who may be MBA, who may be engineer by background. Ensure the right person is heading the department, the right person is running the organization. Examples I can give, lots of examples I can give you where the company has failed because of improper management. If I have to see and take out the due diligence of a management people, you should ensure that the employment history, the age, the type of services the people are given to this company, and the number of years the person is holding in the position in this organization is concerned. So these are some of the important data which you need to look at. Now friends, I can give you some good examples as far as the acquisition is concerned. I will give you a very, very super example in the recent times, which you would all have seen, and I'll give two great examples. First example is the sale of Future Group with Reliance. That is, Reliance Group has acquired small or large part of Future Group. So you all know that the contributing factor which led to the Future Retail deciding to sell off their retail business is the current cash crunch being faced by the group since it defaulted on its 100 crore repayment or maybe 500 million foreign currency bonds. If I correctly remember, friends, over the years, Future Group had accumulated almost a heavy debt of about 12778 crores, about 12,000 plus crores until September 2019, and which coupled with lots of lakhs of fund which we were not able to repay. So with the worsening debt situation, as much as 75% shares of Future Group has it was pledged to the lenders. However, let me tell you one important point. In addition to the default in repayment, the triggering point that caused the main shock was the COVID-19 situation. Now remember, this entire today's webinar is based on this business merger and acquisition India post COVID-19. Now this is one classic example which I would tell, that the multiplication of losses happened purely because COVID-19 situation worsened the financial situation of Future Group, which was at some point of time with the profitable venture of Big Bazaar, and then ultimately had to be shut down due to the lockdown. Now, obviously, Future Group was known as the retail king. Mr. Kishore Biyani was always overburdened with the debt lately, and hence he had to sell out a large part of stake to Reliance Group. So Reliance Retail, it had a retail solution. Reliance is in the rise to the top retail business and started 14 years ago. So today, if you see Reliance retail network is almost over in 7,000 places with 12,000 stores, making it one of the fastest retailer globally ranked among the top 100. So in April 2020, in the middle of this disruptive event of this human history as far as the COVID-19 situation is concerned, you would have also seen that Facebook acquired 10% stake in Reliance Jio by investing 40,000 crore in Jio. So see, you may see there is a deal which is going from both ways. Reliance is giving some of its stake in some other company, and it is buying also from another company. So you would have seen that Reliance, some stake was acquired by Facebook at 40,000 crores, and Reliance was able to mop up a huge amount of money as far as this is concerned. The acquisition of Future Group retail business will also substantially add value to Reliance's retail in its Jio market. So this is also with a vision of creating a confluence of online and offline in form of the backward integration into the supply chain. So today, if you see, the Future Retail has about 1,500 retail stores across the country, and these retail include some of the top brands like Big Bazaar, Easy Day, then Fashion at Big Bazaar, under the Central and Brand Factory, E-Zone, Food Hall, Nilgiris. These are some of the best names which I can talk about. I would not like to go into the terms, what terms it's taken or what was the terms on as far as this is concerned. But let me tell you, there was a massive haircut on the debt. Future Group's lenders have been asked by Reliance Industries for a massive haircut of about 30% on the outstanding dues of rupees 600 crores, in addition to the refinancing part of the borrowings for a further period of 5 to 7 years. So see, this is a very strategic and important move where there has to be some haircut on the debts decision has to be taken. So the bankers are highly likely to agree on some haircut, since there is an inherent need of reviving the entire business, which acquires and requires a strong promoter with deep pockets. So additionally, the bankers, of course, fear bankruptcy and would be inclined towards the Future Group's revival. So because that is one of the main things that they would have in mind. Now, friends, I would give my last two examples and then I will end my webinar. One example is acquisition of Tata Motors with Jaguar. This is Tata Motors is very close to heart for all of us. First, of course, because it is a company which acquired global brands. Second, it is a very much an Indian brand. It has a manufacturing unit in Pune, which is very much heart of our college also. And at the same time, geographically, I have seen lots of our students, they get internship and training opportunities in Tata Motors. So friends, in 2007, the Ford Motor Company, a widely respected company, which also happened to be world's third largest automaker based on vehicle trade, it had reported that the largest annual loss in its history had come to them since its establishment in 1903. So if you remember, Ford was established in 1903, but in 2007, the company reported a big loss, and it was almost to a tune of $12.8 billion. And it was, of course, there was no profitability until 2009. So Ford stated that due to this weak economic situation, it was one of the primary reasons that it decided to sell Jaguar and Land Rover. So these two brands were suffering lots of losses, and Tata Group, it came into this situation where it thought that by this strategic, you can say decision, it may acquire these two companies, it may get a discounted price also, and it may move towards a slightly monopolic nature if they go and buy this. So first and foremost, it was a strategic as well as economic situation for Tata Motors, because they were in a terms where they are able to cope up with both these situations, the economic as well as strategic. So that is why this deal was very close to the heart. So the deal would assist the company in acquiring a global footprint as well as entering the prestigious segment at a worldwide. See, this is very important. At a worldwide automobile market is concerned. So after this deal, Tata Motors owned the cheapest car, that is Nano, and the luxurious car, that is Land Rover and Jaguar. So both ends of the spectrum was owned by Tata Group. So this is very important, friends, that this deal ended up Tata Group, boom up into the top brands in the world. So Tata Motors became a major player in this industry after acquisition of Jaguar and Land Rover, and both of which obviously had a global presence. And this was very, very important for them. It was, of course, very prestigious for all the companies. On the other hand, of course, Land Rover, it is a heavy duty vehicle based on the fact that it is a four-wheel drive, and it is preferred by most of the government people to carry out different tasks in rural areas in USA also. So it had all those features, due to which it may be very good for the Tatas to get penetration into this big automobile companies. Some of the German companies like Porsche is there, American Volkswagen is there, such as Audi is there, Mercedes is there, Lexus is there, Ferrari is there, Fiat is there. These all were in now top brands in competition with Tata Group, because Tata's acquired this brand. Now, if I would talk about one thing, what are the strengths of Jaguar and Land Rover? Okay, so though Tata Motors acquisition of two of the most respected brands, that is the iconic British brands of Land Rover and Jaguar from Ford Motors based in the United States, Tata Motors stands to enjoy some gain or several grounds. So some of the, of course, I give you the examples, but the penetration into a premier segment in this regard into a global market, it catapulted the entire Tata Group into a different level altogether, right from a Nano to the Jaguar and Land Rover. So they had all the spectrums of the car. Now, friends, I would like to give one of the brilliant examples of a major challenges and acquisition which was done by Indian brothers who were a part and parcel and who did an acquisition at a very, very young age. If you go to Google and type out only the words Turukhia brothers, just about Turukhia brothers, you would find out a fantastic story of year 2016. In 2016, two students, IT students, Divyan Turukhia and Bhavin Turukhia, who are sons of a lawyer called Priya Turukhia and a chartered accountant called Mr. Mahendra Turukhia. They had a company called MediaNet. Now, MediaNet, it was a global advertising technology company that developed innovative products for both publishers and advertisers. So, my friends, if you go to Google or Yahoo, you would find the scroller at the side. You know, these are called the advertisement scrollers. So, these brothers, that is Divyang and Bhavin Turukhia, they had made a company from a rags to riches company, which was started with a small entity here in Mumbai, and sold out their company in the year 2016, first at $900 million, and then subsequently the deal value was almost for $1.4 billion. So if you go to our Google, you will find that the IT company MediaNet was bought over. That is, the acquiring company was Beijing Mineto. It's called Beijing Miteno Communication Technology Limited. It acquired MediaNet from Indian entrepreneurs Bhavin and Divyang Turukhia. Now, they did not sell their entire company. They sold this particular deal as far as the MediaNet is concerned, but they had other verticals also and other companies also. But remember, friends, this was one of the most talented acquisitions which I saw in my history as a lawyer also, as an accountant also, or as an engineer also. If you see, the revenue that MediaNet had was the second largest contextual advertising business worldwide. So if I say the age bracket of these two particular gentlemen called Divyang and Bhavin Turukhia, they are aged at 35 and 38 years old. And at the age of 35 and 38, they sold the company at $1.4 billion. In even the COVID situation today, that is one of the companies which is doing lots of business and lots of revenue is gathered. So MediaNet had 800 plus employees, and they had operations across New York, Los Angeles, Dubai, Zurich, Mumbai, Bangalore. They had a headquarters in New York, and the global headquarters was in Dubai. So this company was acquired by this Chinese company, and the Chinese company, the Chinese consortium, which had was very much interested in targeting this company, was that because if they buy this company, they also slightly move towards the monopoly of this product. So MediaNet was a key player in the ad technology space and announced that it is being acquired by a Chinese consortium, and that was almost for a cash out transaction valued at approximately $900 million. And this was one of the youngest entrepreneur brothers in their 2016, which was a headline in the Economic Times in year 2016, where the Beijing company, that is the chairman, I remember the name of that chairman because I was studying this case study, that the consortium was led by a gentleman called Mr. Ziyong Zhang, who was the chairman of Beijing Miteno Communication Technology Private Limited. And they called these brothers, they told, we are interested in your product, please give us the offer. And they have been negotiating for almost a week. And then finally, they broke the ice, and this Chinese company bought over this Indian IT company, which is headquartered in Dubai, at a price of almost $1.4 billion. So friends, if you get an idea and if you want to learn something more about it, you can always Google out on this particular company called Turokya Brothers or Media.net. So Media.net currently, it was managing almost a $450 million of annual advertising revenue. So imagine in 1 year, if you're having $450 million worth of revenue, in 5 years, you would have almost $2.5 billion. And that is why this Chinese company was interested in buying this company. So it established itself as a monopoly, and rightly, as I earlier used the word, an oligopolistic market was created by them. So the acquisition will enable MediaNet also. Now see, what will enable MediaNet? MediaNet will enable MediaNet to be on a greater platform. So this money which comes, it will also accelerate the company's growth and deploy its money and the product in different more sectors. So that company, that is Bhavin and Divyang Turokya, also had other companies. Now they will invest this into newer products, and with their proven track record and performance, they also have been trying to build up so much good business in different sectors. And this was one such good example which I wanted to share with you guys. So friends, if I have to just give one more example, as far as the Reliance's stake is concerned, with Jio is concerned, Reliance sold its stake to Facebook, Silver Lake, Vista, General Atlantic, KKR, Mubadala, Abu Dhabi Investment Authority, TBG, PIF, Intel, all this total, including Qualcomm and Google Technologies, it sold off at 1,52,000 crores, and this stake is just 32.94% of the companies held together the stake in Reliance Industries today. So friends, I would like to thank Bharati Vidyapeeth to give me such a wonderful opportunity of this particular webinar, and I am so glad that I have been able to impart so much of information to all of you. And I thank Dr. Anand Bhalerao for giving this wonderful opportunity of briefing all my friends. Thank you, Bharati Vidyapeeth Engineering College. Thank you, friends, for listening to me. And I thank you for arranging this as a live webinar, because I saw there are lots of people who are seeing it live on YouTube also right now, apart from the Microsoft Teams. So thank you so much for giving such a wide coverage also. Thank you so much.
Thanks a lot, sir. Thank you. Thanks for such a wonderful presentation altogether. I hope I'm audible.
Yes, absolutely audible. Absolutely audible.
Okay. There's a bit internet slow over here, but then the whole scenario, and I, as a non-law background, maybe engineer, I got to know a lot of things where I can exactly see the business from a different point of view. Up till today, we were only viewing the news on the television or in the newspapers that yes, this merger took place. There was a takeover when I was doing my engineering, there was the Reebok was took over by some organization. Recently, the Vodafone Idea merger happened, so we were only getting to know as to what these mergers and how the company take over for the other. To the other company, but then exactly what are the different types, what are the different parameters, and what are the exactly exit points, the profit, the financial, the economics which has been involved, all those things really made us to view this merging, or I can say the overall business entity with a different specs, I can say. So I would like to actually take up with the questions, but I guess students would put it in a chat box first of all, or any one of you can unmute yourself. We will take only 2-3 questions for now, and then if more questions comes out to me, what I will do, I will compile those questions and I will reach out to you for the possible solution. So instead of raising hand, you can directly unmute and ask the question, because one of the student has raised hand. Particularly, if I'm not wrong, he is Abhishant Malik. You can ask the question,
Yes,
Abhishant.
sir. Yes, sir. Good afternoon, sir. Thank you very much for the session. Sir, you talked about getting patented the product. So suppose I have a and I want to open a startup with that product, but you know that patents are quite expensive. They cost around 30,000 to 60,000. So what would be the best way for me to move ahead with this idea? Is there any way to get investment for my patent if I move ahead with the startup? So yeah, that's my question. Uh, Sorry, sir, you are not audible.
Amit sir.
Yes. Am I audible now? Am I audible
Yes.
now?
Yes,
Yes. Yes.
yes,
Yes.
yes.
So it's a very, very good question he has asked. The government of India has been focusing on a sector called MSME sector. Okay. MSME sector is one such department which is funding lots of startups now. So if you have a good project report and if you're also finding difficult to get a loan, you can contact us, our office. We will help you getting the loan from our MSME department. MSME department is in 3 parts. There is micro, small, and medium. So you may fit in the bracket of any of these 3. So anywhere from 1 lakh to 100 crore if you want, you can approach the bank through the MSME scheme only, and then you will get a faster loan. You only have to submit your background. You only have to submit your financial status today, and just have to submit the basics about your project report. So your project report may be, having a cash flow or showing some important documentation as far as the sale of products is concerned. So you may make a small project report, and based on that project report, you can approach any bank and try to take this to the MSME sector.
Fantastic. So
Thank
I
you
hope
very
Abhishant.
much.
Yes, I hope it is
Yes.
answered for your question.
Yes.
Correct.
Yeah,
Correct.
thank
So
you,
you can
sir.
mute yourself now. Anyone? We can take one more question, and roughly we can then close with the session. Anyone from this participants?
Yes, sir. Good afternoon, sir. This is Sarthak, sir.
Yes.
Thanks a lot for the session, first of all. And sir, my question is, as you were talking about the mergers and acquisitions, and sir, as Nachiket sir mentioned about the Vodafone and Idea merger, that is currently known as the V merger. So at that particular time, Vodafone was also in a particular depth, and as well as Idea was also in a particular depth. But you told us that most of the mergers or the acquisitions are look forward with a vision. So at current situation, if we look at the stock prices and the stock market about the V products, so the stock is currently going down and down by down every day. So what, according to you, was the vision at that particular point of the Vodafone company? Because if they are not going as per plan, so what actually is happening with the company merger? Because as per the if Geo has acquired almost most of the customers, consumers around around the country. So if we talk about that particular merger, so what was the vision at that particular point? Because nothing is going as per planned.
Okay. See, this is very good question. I will divide into two parts. First is if you see the scenario of mobile companies, that is the telecom industry in India, it is held by about 6 or 7 players only. So if you just go to South India, East India, North India, you may find some players or the other. Airtel, maybe Vodafone, maybe Jio, or those sorts of things. Now I had used a word in this webinar earlier. It is called oligopolistic market. It's called oligopolistic market. Oligopolistic market means what happens? The people are in the same industry, the people are in the same category of business, and they would like to acquire each other. So what happens? Example is the banks. There are 27 banks, which became 12 banks. There are, say, example, 10 telecom companies in, say, 2010, which became 5 now. Okay. So by acquiring another company who is your competitor, you are trying to reduce the competition in the market, and you are also making your customer base wider. And apart from being wider, you are increasing your number of revenue also, and your numbers increase. Now, whether it is profitable or no, that's a different thing altogether later on. But assuming that Idea was a loss making and Vodafone is a profit making. So by acquiring Idea, you acquired its customers, you acquired its revenue, and Vodafone may be able to give a service better than that. If you see the number of retail stores of Vodafone compared to Idea, I still presume that Vodafone has more penetration than Idea. So by doing this, you increase your number of shops as far as the Idea or Vodafone outlets are concerned. At the same time, you increase the entire broad spectrum of the entire customer base, and by this you increase the revenue fourfold because of that. So now your competitors also have reduced, the size of competitors have reduced, and so you are able to service more number of customers at the same price with the wider geographical reach now. This is the reason and logic behind why Vodafone has and would have acquired Idea, and that is because they are trying to create a monopoly and an oligopolistic market, and now there will be the competition only between 3 or 4 people only. That is the main reason.
Correct. So I guess the main motto, or what you can say, the objective of Vodafone Idea was to increase the monopoly basically in the market. Because Reliance Jio is going all its way around with their plans, and I think Airtel, Vodafone Idea, and Jio are left out in the whole telecom market. So earlier, when we were in the engineering in the days, there were a lot of companies. I may say there was Tata Docomo and Aircel. A lot many companies were there into the market. But then eventually, within last, I can say 4-5 years, only 4 are left out. 3 precisely now.
Right.
So yeah, that would be the objective.
No, in fact, you see Reliance. If you see Reliance Jio, it has given stake to companies like Facebook and Qualcomm. Now what happens now? They also now get the entire customer base of Facebook also by doing this deal. So it's a very strategic move for Jio also, na? They increase the entire base overnight now.
Correct. Yes, correct. So it is very interesting indeed, sir. Like I was, like all of us, we are more inclined and interested with the technical things, and we were not having that perspective. Key business is going that way. So I guess students will be more interested, motivated to see the business with different views now. So with this note, sir, I would like to conclude the session. I would like to extend my thanks to you for allotting, I can say, 1.5 hour, almost 90 minutes of your beautiful talk. Almost it was like everything was coming out as a new to us, and we were in a position to receive it. So we were at a grasping mode, and it was triggering somewhere the thought process of me, and also I am sure with the students, that yes, this law or this domain or the management of the business is something which can be taken as a career interest altogether along with the engineering background. I can say it developed the analytical skills, it developed the logical thinking skills, and we can apply it for the business also. So with this note, I would like to extend the thanks to our principal sir, our management, every element of Bharati Vidyapit, our chancellor sir, vice chancellor sir, our secretary sir, and all the entire family of Bharati Vidyapit, principal sir, Dr. Anand Rao sir, and all the faculty members in the room, the students definitely, and all my dear friends. Thank you, sir. Thanks a lot. So have a nice day. Have a nice weekend, sir. And happy Dashera to you, sir. Tomorrow there is Dashera.
Thank you so much. Thank you, everyone. Thank you so much.
Thanks.
Thank you.
Thanks a lot, sir. Chalo. Thank you. Good day.